You're watching Stockwatch. I'm Zinati Guma, and joining me to unpack your stock-related questions today are Zwelakhe Mnguni from Benguela Global Fund Managers and Schalk Louw from PSG Wealth. Old Oak. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag Stockwatch. Thank you so much for your time, gentlemen. Really appreciate it. Let's start off with, I guess, a question that covers a lot of stocks. And this says it's on the all-share top 40. Please ask the panel what they think about it. Up 27% from the April low. Will we get a decent pullback? Firstly, I think, Schalk, let's start off with what's been behind all the optimism. And actually yesterday there was a question that came through as to why the JSE is performing so well in such a low growth environment in South Africa.
Good afternoon. Yeah, but first we need to high-five each other. I mean, 5 years ago we sat here, and I think most of the people in South Africa were sort of looking down dire straits and saying, well, South Africa will never be able to outperform our international counterparts again. And yeah, we're sitting 5 years later. I actually saw a few graphs or comments via social media that we've now, over a 5-year period, surpassed the growth of the S&P 500.
Wow.
If that's true or not true, I don't know. I mean, but bottom line is, we've been having a phenomenal time. But one should always just remember that we came off very, very low bases. I mean, we've got some catch up to do, as they usually say. So the South African, well, let's call it the JSE, has been able to outperform the MSCI World Index, or All Country World Index, over the past 12 months. Also, the MSCI Emerging Market pretty much doubled up in dollar terms what the Emerging Market Index has done. Just showing you how well we've been able to sort of get out of this recovery. But when you look at it on a forward PE basis, and that's where we usually looking in the rearview mirror is nice, it's beautiful, we can sort of high-five each other, like I said, but looking forward, I mean, the economists seem to be a little bit bearish in terms of the forecast for the growth of South Africa, but the analysts seem to be looking, fairly positive. They like how corporate South Africa has been managing their affairs. When you look at it on a forward PE basis, South Africa is still not expensive. And still looking on the cheaper side compared to some of these internationals. So would I be looking at these levels and say, well, this will be selling time? On a relative basis, definitely not.
Yeah, I mean, it's also quite an interesting thing to note that South African companies have really been able to handle their affairs. A lot of them coming out with results and talking about challenging trading conditions, muted markets, but then coming out with really, really good numbers, which proves the muscle that is being grown inside the companies. I mean, Zwelakhe, it's not even just the JSE, it's also the Rand. I am so impressed with how the Rand is doing. It's been so stable, I think, for the last few weeks or month or so, at 17 Rand 70 the last time I checked. But just the general optimism, I guess, on our equities and also our currency. I mean, what does this really speak to?
I mean, the only addition I'd make is that a key part of that has been carried through by the resources sector. So the gold and more recently the PGMs have been the main driver of the performance on the JSE. So we've had good rally in gold price, and more recently we've had some PGM prices rallying, and that has supported the price very well. Notwithstanding that, I think we need to acknowledge that the businesses have held up a lot better. They manage their businesses much better. So we are seeing many of them de-gearing their balance sheets, and we are seeing some positive momentum at the corporate level. I'm not so sure whether at the execution at government level we are seeing the same momentum, but I think we remain hopeful.
Yeah. I mean, just talking about gold counters, Anglo Gold Ashanti actually came out with an announcement today, Schalk, that they are being listed on a number of Russell indexes in the US. Of course, we know that they when was it, last year when they moved their primary listing from the JSE to the New York Stock Exchange. And I'm wondering what this does for their investment profile.
Oh, this is great news for shareholders. Definitely, I think they mentioned liquidity. It definitely makes Anglo Gold a lot more liquid.
Yeah.
I know a lot of viewers would now turn around and say, well, there must be something in it, because this only happens, I think, the 27th of June. That's where it will be included. So I just think, I don't want to call it the worst kept secret, but I think in the market we've sort of heard that they're going to be included in these Russell indices. And for that reason, when you just look at it on a year-to-date basis, Anglo Gold up to, and that's yesterday's trading prices, year-to-date. And I'm not going to lie, when you're talking about 96%, that's nearly double up on return on Anglo Gold since the 1st of January this year.
Wow.
But I mean, if you compare that to Goldfields, 78%, Durban, Rudapur, Deep, 51%, Harmony also lower, and Pan African Resources, it also came out with the trading update today, 36%. So we can clearly see that market sort of expected this to happen already. With Anglo Gold really outperforming their local counterparts by quite a handsome margin.
Yeah. I mean, just talking about these gold counters, and actually Pan-African Resources saying that what they produce record gold production. And I mean, that's something that's really good, because you've got the higher gold price and also production. And Pan-African Resources seems to be one of the few gold miners that is able to match their production and their operations with the higher gold price. I mean, at this point, Zwelakhe, would you still be looking at gold, considering how much those miners have rallied in the last while?
Probably I need to disaggregate that into two pieces. I think on one side, the gold price, I remain quite optimistic about the gold price long term.
Okay.
Primarily because of the creation of fiat money by the developed world, particularly the US. I think that will create some challenges and be supportive to gold as a stable or hard currency. I think the companies themselves are a beneficiary of that particular trend. So the likes of Pan Africa, I mean, let's not kid ourselves. It's not a big company in terms of production. I think they just over 100,000 ounces per 6 months. So I do think that they're well positioned to benefit. I mean, the cost of production is 1.5 probably, and they should be able to get healthy margins. They spoke about de-gearing their balance sheet as a result of this strong gold price. Bottom line, I don't think we are at a peak of these prices. I think as the gold price runs, we would likely see them benefit, but I wouldn't extrapolate that into perpetuity either.
Okay, all right. Well, let us go into Nedbank. Of course, as we're talking about South African companies that are performing well in a low growth environment, the banks being one of those sectors. But actually, recently haven't been doing so well on the share prices. Please ask your guests what's their opinion on Nedbank and why the stock is taking a beating. I'm actually not sure if it's just Nedbank, because I think at least for the last 2 days, the banking sector, all of them have been under pressure. Schalk?
Yeah, it's not really just a Nedbank thing. It's definitely banks across the board. There might be numerous reasons for that. I mean, usually we know when banks like not a too high interest rate, naturally, then the borrowing becomes a bit of a problem, or mortgages and those kind of things becomes a bit of a problem. But they do like interest rates to be sort of slightly higher or moving slightly higher. You know, their margins look a little bit better then. And inversely, the same thing, you know, in a declining. We've just seen interest rates being cut. I think a few economists now turning around and say, well, most probably we'll see the next SARB meeting seeing another quarter of a percentage cut. So that could be one of the reasons. But one shouldn't forget that we've seen a great rally in the latter part of last year in the banking sector. So this is maybe just a bit of a breather, not necessarily. I still think our banks are extremely cheap, and I don't include the likes of net banks. You know, when we talk about net bank, they're trading more or less at a 1 times price to book, similar to ABSA. So most of these banks are still trading, you know, way lower than the average price to books. And I use the past 15 years, way lower than that. Yet their ROEs, or return on equities, has improved really nicely. So maybe just something to have a look. And then the dividend yields. I mean, wow, their dividend yields are extremely attractive at current levels. So I think to the viewers' question, maybe just a bit of a breather, and not necessarily something wrong.
And it's been quite interesting for me because, I mean, I spoke about the strong rand, and in the last few days, we've seen the financial sector experiencing pressure, but also the retailers. And I've been wondering, I don't know, is this a consumer story? Zwelakhe, your thoughts?
Yeah, look, I agree. I think the banks are relatively cheap. The yields are decent. Many of them trading at between 6 and 8% yield. I think, however, I mean, as my colleague said, the interest rate reduction is generally not a favorable scenario for the banks. Long term, I think the valuation would come through, and I would hold on to this kind of investment. I think on the retail side, I mean, there's been some challenges that we saw around the consumer being under pressure. Hopefully, we've seen the back of that, and we should see them starting to stabilize at current levels. So I wouldn't be overly bearish the consumer stocks. I'd just be cautious that I don't make a big bet until there is clear evidence that the consumer is getting some support, either through job creation or some government reforms.
All right. More questions, gents, and we're going into the kind of retail pharmaceutical space. And Dis-Chem, please, can you give me your view on Dis-Chem, as its share seems to be deepening into the red since its earnings announcement? Must I get off the board or the boat or stay? Zwelakhe, yeah. I mean, was there disappointment on the results on Dis-Chem?
I thought the results were fair. I mean, they were not as good as the Clicks numbers, particularly on the retail side. But I think they were fair. Okay. So it might have to do with the kind of expectations that the market had ahead of those results. So the pullback has been sharp, but I mean, we up probably from around 23 Rand about a year ago. And we're sitting at 3,100. So it's not a bad performance in the last 12 to 18 months.
It's quite interesting because you get a lot of these companies that come into the sector, and while they're still new, they're seen as a disruptor, and you get all this optimism. Schalk, do you think that, I mean, just expectations just tend to get so far ahead that maybe some companies just don't meet those expectations, that maybe they're unlike Capitec that has constantly met the bar and even surpassed the bar?
Yeah, it's exactly to the point. You've got a few of these companies, and we started off the show where we talked about new highs on the top 40 and the JSE and the lower levels that we came off. We also saw that, you know, some of the, over the past, let's call it 5 years, that the companies that did well continue to do well, and the companies and I want to kind of think of a likes of a Sasol. Sasol, every time you think Sasol can't go any lower, it did to surprise you to go even lower. Back to these companies. I mean, so this is just where we at in the cycle. I mean, you've got these companies that's priced. I don't want to say for perfection, because Dis-Chem by no means is priced for perfection, but it is trading at quite a handsome premium to the market. So when you've got a company like Dis-Chem, and like my colleague just said, I mean, it was good. I mean, then you need to be great. Your results need to be really, really good and not flattish, because at those type of multiples, then you are gonna get, I don't want to say punished, but you are gonna see a movement towards the companies that keep on growing, like the clicks. Comparing to as well, also what I found looking forward, when I look at management, their forecast, they were talking about opening 39 new stores for this coming year. Look at clicks, they're looking at anything between 45 and 55. So therein lies, I would say, the problem. When somebody is looking for a typical pharmaceutical type of retail business, they're going to choose the one that's growing at these type of multiples, and unfortunately, it's clicks at this stage.
Yeah. I mean, Zwelakhe, because a lot of the time you get these companies and they are priced for perfection, and people say that they're expensive. But I mean, which companies would you still be looking at that are kind of on that trajectory where they keep on surpassing expectations, and it doesn't look like they're going to pull back anytime soon, where somebody can maybe even enter, even when people are saying that this is quite frothy?
Yeah, I mean, the two classic examples are Capitec and Clicks. I think what it boils down to is a finessed execution machine that basically keeps on delivering. I mean, if you look at Capitec on one side, the expansion into business banking will give them quite a lot of runway, so that even if the economy in South Africa is doing so well, or interest rates are coming down, they're still able to get some growth, because they steal market share from others. The same thing with Clicks. Their model, unlike the Dis-Chem big stores, they basically run much smaller formats. And that format, they keep expanding it and taking over some of the smaller pharmacies. That model has worked very well for them. So they keep surprising on the upside. But in general, I mean, you have to be cautious when companies are trading at elevated price multiples compared to their history, unless you have such a conviction on their execution.
Schalk, which of these mean growth machines would you be looking at?
Oh, I love them all. And just for the record out there, I'm not a holder. So how do they say the one that got away? But in this case, it's the two or three that got away for me. So I love them all. I mean, the likes of Capitec, they're doing phenomenal things. I mean, and for that reason, they are trading. I mean, we talked about a price to book on a Netbank or Absa of 1 times price to book, where the likes of a Capitec currently trading between 6 and 7 times price to book. So I mean, 6-7 times the valuations of a typical Absa. They're doing great things, and while the companies are doing great things, I mean, like I mentioned, Nuclex planning another close to 50 new stores for the coming year. Capitec expanding their footprint, on across the borders from South Africa, Mexico, and Eastern Europe. They also got these wonderful initiatives, where they look at mobile data and those kind of things. So while companies are doing, these great initiatives, while companies got great management, I say, what did Warren Buffett say? When is the best time to sell these companies? Never.
Okay, yeah. I guess another one that I could add there is ShopRite. All right. Yeah. All right. Well, let's get to Blue Label. I mean, I know not a lot of people look at this company, and of course, especially since their inclusion of Cell C that kind of diluted the rest of the company, the core business. But obviously now we did get news, I think a few weeks ago, that they're looking at a separate listing of Cell C. So the viewer says, should I consider now going into Blue Label, given that they want to unlock shareholder value with the listing of Cell C. Zwelakhe, is this one that you're looking at by any chance?
I don't look at it closely anymore, but I mean, the bottom line is that I do believe that the listing of Cell C should enable them firstly to remove a lot of pain on their balance sheet, but also enable them to release some value to shareholders. So I'll be positive about the value unlock, but I'm not sure if long term, I mean, if I had Cell C and Blue Label, I'd probably be more inclined to take the boring business of Blue Label than go for Cell C.
Okay, interesting. Schalk, I have one for you. Quite interesting. The viewer says, I've been buying stock since 2020 via FNB stockbroker, and I have built quite a good portfolio with some good growth. However, I also bought some stock that have not performed. I think I can use a service of a share advisor. FNB only provides this service if your portfolio is 3 million rand. Mine is below 1 million rand. Is there any share advisor that deals with people at my level, Schalk?
I promise all the viewers out there, this is not a loaded question. This was not aimed at me. And I think by this stage, there will be a name here that pops up here somewhere giving you my contact details and my email address and everything. No, all jokes aside. I mean, what we've found, I mean, the question, the viewer's question is typically, I mean, we've actually found that some of these people making use of stockbroking services tend to still need the advice of an advisor, a qualified advisor. And like any advisor, financial advisor, stockbroking advisor, wealth advisor, doesn't matter what type of advisor, it's a personal touch. And so there's quite a few out there. I think I'm not going to mention, because do I mention anyone else rather than PSG then but I would really encourage this viewer to do the homework, because there's still a few great stockbrokers out there. I think South Africa is blessed to have really wonderful intellectual capital out there, and build a great relationship with that person, because that's ultimately what it comes down to.
Schalk, I need to give you an invoice for this advertising slot.
You need to.
All right, gents. Let's get to your stock picks for today. Zwelakhe, what are you choosing?
I'm going with Capitec. Self-help story, trading at a high multiple, but I think it is a business that can be relied upon. They've had a change of guard from within, and I think they'll continue to perform. It's a tried and tested business model that they operate, and I think they'll do well over the long term, even without South Africa's economic performance.
The gift that keeps on giving. Well, what gift are you looking at for at this point, Schalk, as your stock pick?
You're going to love me today. You're going to love me today. Because, despite the fact that I love South Africa, I think the JS is still offering, immense amount of value. I'm going to go across abroad. I'm actually going to find something abroad, specifically Diageo PLC. Now, for the viewers out there that don't know Diageo, I think they will most probably know their brands. Johnny Walker, Guinness, Smirnoff, Captain Morgan. So I think now I've got a few viewers now.
It's not Puza Thursday yet, Schalk, please.
it's close enough. It's close enough. But this is I mean, for let's call it investment reasons, it's really looking attractive. This is a company that's still trading way off its let's call it pre-COVID levels. Then post-COVID, it really performed extremely well, and today trading pretty much half the price price. Whatever's trading, just let's call it post-COVID. When you look at the economists, they're looking currently at let's call it 22% upside target price for the company. So it's looking on a financial basis, it's looking good. The reason for the big pullback, recent pullback was basically the tariffs. I mean, we've since the tariffs actually been announced, they did mention that this could cost them about 150 million US dollars. But they also mentioned that they don't see such a huge problem. They do think that they can offset most of these tariffs, whatever it will be, with great cost-cutting initiatives. And yeah, I think at current levels, this is a company we were talking about the likes of Nuclix and Capitec and Shoprite, which is sort of company that's seen in South Africa as quality companies, trading at higher multiples. Now, Diageo was typically that type of company, trading at a higher multiple because it's such premium brands, and it's got a great management company. Today, trading at a price earnings ratio of just over 16 times. I think it's cheap. At a dividend yield of 4% for international company, I think that is looking attractive. So yeah, pour me one of those, please.
All right. Well, I've only just got water here, Schalk. Anyway, thank you so much for your time and for your analysis today, gents. Really appreciate it. That is all for tonight's Stock Watch. Thanks to our guests, Zwelakhe Mnguni from Benguela Global Fund Managers and Schalk Louw from PSG Wealth Old Oak. Up next, the close. Stay watching.